gold makes a bold comeback, actively challenging the $2,700 mark. What's fueling this explosive rally, and which key events could decide its next move? Don't miss the insights in this episode of As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold has broken out of its range and briefly surged past the $2,700 mark this morning. The big driver behind this rally has been the PBOC's return to gold purchases, and we've also seen safe haven demand due to the Middle East tensions, plus expectations for central banks in developed markets to keep easing. This week, the US CPI report and China's Central Economic Work Conference are the key events to watch, as they could play a big role in gold's performance through the end of the year. So in today's video, I'll still divide the content into three parts as always: technical analysis, a summary of what's driving the market, and a look at the upcoming risk events. So let's get started. If we take a look at the gold against US dollar daily chart, it's quite clear that after consolidating between $26.20 and $26.60 for about 10 days, gold has regained its upward momentum. Since last Friday, it's broken through several key resistance levels, including the top of the range, the 50-day moving average, and the 61.8% Fibonacci retracement from the November downtrend, and is back above $2,700. So if the bulls keep pushing, we could see some selling pressure around $27.20 or the local high from November 25 and potentially around $27.50. While on the flip side, if the bears take control again, we could see support around $26.60 and the 50-day moving average. While when it comes to this week's 2.6% gold rally, I'd say China is the biggest factor. The PBOC resumed buying gold for the first time in 6 months, adding 160,000 ounces in November. As the world's largest gold buyer, China's move has really energized the market. Plus, other emerging market central banks have also been buying a lot of gold. According to the latest World Gold Council data, India, Turkey, and Poland have increased their gold reserves by 77 tons, 72 tons, and 69 tons respectively this year, making up as much as 60% of global net purchases. And China's gold reserves are still relatively low, and with ongoing uncertainty in US-China trade talks, the PBOC could continue increasing its holdings. Plus, with concerns growing about the US dollar's stability, the trend of central banks buying gold is likely to support gold's performance in the longer term from my personal perspective. At the same time, geopolitical tensions remain high. The situation in Syria is still quite up in the air. US authorities are working hard to wrap up the Gaza conflict before Trump's inauguration, and we don't quite know how long the Russia-Ukraine situation or political unrest in France will last. With all this uncertainty, the demand for gold as a safe haven asset is still very much in play, I would say. And finally, while the global easing trend has largely been priced in, potential rate cuts from the Bank of Canada, the European Central Bank, and the SNB this week could give gold a short-term boost, though the impact should be quite limited. So all in all, gold has found its upward momentum again this week, with China's return to gold buying playing a key role. Geopolitical risk and central bank easing have also helped lift prices. While looking ahead, I think there are two key events to keep an eye on. The first one would be tonight's US CPI release. The market expects core inflation to rise by 0.3% month-on-month and 3.3% year-on-year, in line with last month. If the core CPI comes in higher than expected, say 0.4% month-on-month, it could slow the pace of rate cuts in Q1 2025, which could put some pressure on gold. The other major event, I would say, is China's Central Economic Work Conference, or CEWC in short, over the next couple of days. After Monday's Politburo meeting where China announced plans for moderately loose monetary policy and more proactive fiscal measures in 2025, traders are expecting fiscal deficit to widen, which gave a temporary boost to market sentiment. But since there's still no clear guidance on how these policies will be implemented, the CEWC will be crucial. So if there are major announcements like increasing the deficit to GDP ratio or issuing special bonds to support real estate and domestic consumption, gold could see a nice lift, especially if this drives more fiscal demand as we approach the Lunar New Year. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!